Tuesday, September 26th, market analysis, Stan Ehrlich. Good morning, 9:53 California time, the middle of the trading day. And I always start out with the stock market indexes. Today, I'm going to start out with the E-mini instead of the SPY. Essentially the same thing, same index, except remember, the E-mini is a futures contract as well as an index, and it has much different trading hours, so it doesn't close much compared to the SPY. Therefore, you have frequently different price ranges for daily bars or any time frame for that matter, high and low for the bars. So in this case, the neckline for the E-mini does slant downward slightly, where for the SPY, it slants upward slightly. Timing for the rally highs, the same, etc., but the angle of the lines can be a little different. Regardless, we have a head and shoulder top. The first shoulder was in the middle of June. The top of the market is a bearish ER sell signal on the high day. And of course, we got the exact October 13th low day, the end of the bear market and the beginning of the bull market. These are automated signals. They happen when they happen. Now, how far down are we supposed to go? Well, I've got a 4,110 or so downside objective, and that is a minimum. It can go further. I don't expect much further. That is in the ballpark of a 50% retracement from the October lows to the June highs, July highs of this year. Not an out of the ordinary percentage retracement. Then, and it's going to happen during October, I expect, I hope, maybe very much like last year, although last year was absolutely perfect situation. So I don't expect it to be quite as simple or as perfect, but we're heading down. We're heading down quickly. We're coming right into October next week, and the downside objective seems to be reachable within the next month for the E-mini, as well as the other indexes. And we'll look at the spider. Actually, it's the NASDAQ. You know, I am in the futures group at the moment, so I'm going to flip back to my index group. And here's the E-mini again, December futures contract, just a little different colors. Same objective, of course, 4,110. And no changes. Now, the spider has been on its way down for the last few days already, breaking the neckline, which is slightly upward slanted. Essentially the same index, but because of the trading hours, a slightly upward slanted neckline. Doesn't matter. The patterns are working perfect. The minimum downside objective on the spider is 406. That also happens to be in the ballpark of a 50% retracement from the bottom in October to the highs in July, late July. And we got the bottom with a green bullish ER buy signal on October 13th, and we got the exact high day also July 27th of this year for the top of the head and shoulder top. Amazing. Didn't expect to see this, but here it is. That bottom, by the way, in October 13th was the head of a head and shoulder bottom. And here we have the same pattern, just a top formation or form of the head and shoulder formation. And it's working great so far. Now, actually a little bit better than the big one at the end of last year. So we're oversold. We should have, probably will have, and it could happen at any moment for that matter, a little bit of a rally. The rally should not go up above the neckline. If it does, because there's a couple of gaps to close up here, and there's not in the spider, there's gaps around or a little bit above the neckline in some cases, like the spider. So there's a possibility that the market may violate the neckline for a day or half a day or something like that, and then immediately come straight back down again. We have to be very careful here if it tries to close that gap, because it's kind of not supposed to. It's supposed to stay below the neckline. So rally up to the neckline or close to it in the next few days, and then down into October. That's exactly what I'm looking for. Next, we got the QQQs almost breaking out of its head and shoulder top. The neckline is just a little bit below today's lows. It's super close. And we are now starting to make new lows for, well, since June. So this is bearish for a variety of reasons, not just the fact that it's got that head and shoulder top. Now it is a double shoulder, and in this case also like a double head, a double top for the head of the formation, and a double shoulder over here, which is really part of a smaller 3-week head and shoulder top. I'm sorry, head and shoulders all over the place. True, very unusual. So the little 3-weeker is done, gone, and has worked. Past tense, took 5 days. And it was finished 3 or 4 days ago. But the bigger pattern from June till current is still in progress, and in most cases broken out to the downside, except for the Qs, and I think the NASDAQ also, NQ. Next chart is the NQ, futures contract. Downward slanting neckline, not quite breaking it yet. Classic break of a neckline would be for it to gap below the neckline, as it did in one of the other indexes we're looking at. So let's see if the next couple of days we can't even crash more real quick, then have our rally. But anytime now, there should be some sort of a small rally that I would be very much interested in getting another sell signal during. Next chart is the DIA. It has a gap to close a little bit above the neckline, which is an upward slanting neckline. And this dotted, oops, come on. This dotted line right here is the neckline, dashed line. And we are well underneath the neckline. So we can afford to have a little rally in almost every case I'm looking at here. Plus, we're coming very close to bouncing off some support in an oversold condition. It's about to happen. Next, the Russell 2000 has come down, closed an old gap from June of this year, June 1st. That's done. Come down even more yesterday and tried to turn around. That didn't hold. We're now making new lows like the other indexes for the move down. And again, all of these are going to turn around in October, is from what I expect. And I'm going to show you the October lows for the last 30 years in a few minutes. So stick around for that. So that's the stock market index head and shoulder patterns at work. They should produce a bottom sometime in October. And let's look at those October lows real quick, and then we'll jump into futures. The green bars represent the time frame during October, from the 1st of October to the last of October, for those trading days in October. If the 1st or 2nd is on a Saturday or Sunday, then obviously I'm using, Monday for the beginning of my green bar on the left side and the end of the month for the right side of it. Here we go. This year, obviously, October hasn't happened yet, and I'm looking for this 406, 407 minimum downside objective during next month, right there, far right, where my cursor's wiggling. So that's my bullseye, literally. Previous years, I'm not even going to mention the word October unless it's not, and I'm going to go backward year by year. So October 13th last year, 4th, 30th, 3rd, these are all October. 29th, 25th, 3rd. Let's scroll. September 29th, almost October, and 15th, 9th, 26th, 4th, 4th, 2nd. And these are all Octobers if I don't mention the month. 10th, 22nd, 3rd. Amazing, isn't it? 14th, 25th, 1st, 10th. Let's drag to the right some more. And we're now down to 2001. We have September 21. And then the 18th October, 18th again the previous year, exact to the day. And now we're into 1999, 1998, October 8th, 28th, 29th, 10th. You know, we've only had 2 months, 3, sorry, total months. And now we're back to 1993, October 8th, October 9th, October 10th, October 29th. Oh, it's amazing. There are only 3 years when it was either September or early November when we did not have an October low in the last 3 decades. That's 90% of the time the market's bottomed out in October. Why? I haven't the slightest clue, and nor do I care. All I know is that it keeps happening, and I watch for it, and it tends to work pretty good. Hope it happens again this year. No guarantees, obviously. Past performances, blah, blah, blah. Okay, futures. Let's dive into it. I showed you the mini a few moments ago in the futures group, and here's the NASDAQ. I'm only showing you the neckline on the NASDAQ because I didn't want to cloud the issue with a bunch of other lines and stuff. So, you know, the shoulders in June on the rally. We got some sell signals during the topping out formation, and we got the last shoulder high a few weeks ago, and we're about, it looks like, about to break the neckline and head Tierra del Fuego south. Next, bonds continue to drop, but like stock market indexes, they're very oversold also. And I totally expect a little rally very, very soon in interest rate futures bonds and 10-year notes. The next chart, same thing here. Probably back up, and I'm going to go back to bonds, back up to approximately 118. We're 14 and a half or so at the moment. And maybe a little bit further than that, but I don't see a major long-term trend change yet. Back to 10-year notes, same commentary, up to resistance, same rally. Crude oil, I think this is still topping out. It's got a little bit of a good rally today, but we have been overbought for weeks, which is a very unusual situation. And the last week, there's been no upside progress at all. Frankly, I'm surprised we're still overbought, but that's what the indicator says. And I've been using it for decades, many. I learned RSI from Wells Walder himself. Next, heating oil, new lows. I'm expecting the energy markets to do the same thing on the average. So heating oil is starting to do it first. I think we're going to come back into the support area, the red zone here. That's back down to about 3.0. Yeah, and a little lower, maybe 2.9. Next chart. Sideways trading range, natural gas. Trend is down, definitely. But we have been going sideways for quite a substantial amount of this year, basically since April. We're waiting for a major breakout. We haven't got one. Anything that's tried to break out up or down has failed. And so I'm just waiting. Next, I favor the downside, though. Gold, not holding up well at all. Now back below that previous bear trend line that stopped the rally, basically stopped the rally twice recently. We are now challenging the lowest low for many months, going back to March. There is another support area at 1880-90 area, let's call it 1890. And I do think that is going to be tested now because it appears that not being oversold and starting to break into new lows on a closing and maybe on a lowest low basis also soon is not particularly bullish. And therefore, I'm not expecting it to turn around because it's got more elbow room to the downside. So I'm looking for gold to test the 1890-ish soon, maybe this week. Today's only Tuesday. We're looking at soybeans, no, silver, sorry. Same kind of commentary. Big major support here in this red zone I've got, support area, 22.6. And I think that's going to be tested very, very soon. We may be getting oversold in gold and silver both if we drop off sharply in the next day or two. And that would be into support for silver. So I would expect it to turn around and bounce back up again. Next chart is platinum. Same kind of commentary here also. We've got a lot of support at 893 and a half-ish and down a little bit lower at 882. And I think we're going to get oversold if we get there quickly and bounce off of that area. So that's my objective. And I'm kind of expecting a reversal again. Yeah, again, we had a bullish green ER buy signal in the bottom only a few weeks ago, September 12th. We had another bullish at the bottom on August 17th. And between those two signals, we had a sell signal on the high day on September 1st. Some great signals in precious metals this year. Copper in support, and it just turned oversold today. Classic combination. I think copper's about to start to rally a little bit. It may be heading up a little bit quicker than the gold and silver and platinum, but all four look primed or very close to a prime situation for the beginning of a rally after maybe a little bit more down. Next chart, soybeans. I'm going to say the same thing again. Support area, oversold conditions, prime target for a rally. And I have to say, I wouldn't be surprised to see it come all the way back up to 14 again. It's a 1393, the last tick. So oversold in the last few days, support area, I think it's about to turn back up. If it closes below the blue zone, below 1281, let's call it, below 1280, totally different story. Could get very bearish very quickly. So we have this very important turning point right here. It's going to make it or not, big time, one way or the other. Sorry. So a false buy signal 2 days ago in soybean oil. Now testing a support area at today's low and getting oversold again. I think it's trying to bounce, but we are right smack at a important support line. It looks like a neckline. It's acting somewhat like a neckline. If you get below it, you're supposed to stay below it, but we're not staying at the moment below it. It's not closed yet. So if it closes below the neckline, we're heading down to about 50, probably. But it totally depends on staying below today's lows, or I should say below yesterday's low and close, which is pretty much the same price, low and close yesterday. So it broke the line, but got oversold and is bouncing at the moment. Let's see, watch this very carefully. This next move here in soybean oil should be a fairly substantial move. I might say 7, 8, 9 cents. Yeah, up or down, I'm not quite sure yet. I favor down. Next, soybean meal continuing to act weak on the average. I'm expecting the first support area 378, 379 to be tested. And I think there's a very good chance it could come down to 365 also. Looking for lower levels on meal. And corn and wheat. Corn is bouncing for a couple of days off of a very important historical support level, the lows we saw in July of last year, 22, way over a year ago. So it deserves a bit of a bounce. It got very close to oversold. It actually looks like it just barely missed it. So after a little bit of nothing right here, it's going to tank, dropping a new low ground. And wheat has already done that a month or so ago, tested support, rallied a little bit out of a slightly oversold condition, and then kaboom. And I expect wheat to continue to trend lower also. Cattle, overbought like crazy. I'm trying to peg a top here for you. I can't seem to get a real good grasp on this, but I do think it's in the process of topping out. Next move down should be pretty significant, 165. Looks quite, well, let me adjust that. I'm going to say nothing about the downside objective at the moment. I'm just going to watch for this hopeful sell signal coming up very soon. I just can't expect it to keep going up. It's got too many things that look like it's in the process of topping out, but I'll try to get a better handle on it. Hogs, sideways trading range, resistance stopped the rally a few days ago. Talked about that happening at the time. Worked perfect so far. Support's not holding very well. We're not that oversold at all. I think it's going to slip off even more. I wouldn't be surprised this week if it gets down to 69.88 or even a little lower than that. Longer term trend, obviously down. And it spent quite a bit of time trading for the last few months in a relatively tight range. If we start to get below 69.60, you've got yourself a downside breakout and a move potentially below 50 in the next few months. Next chart, OJ. Can't believe it. It won't stop. I got a real good looking sell signal a few days ago, started to work in particular yesterday, and today it opens a little higher, comes up and stops me out. I'm flat now on OJ, small loss on ER3, probably a small profit or maybe a small loss on ER1. Disappointing at the moment, still looking for a top to develop. Next, Cocoa, looking for lower levels. Overbought conditions got the best of it. No surprise. Probably going to come down to 3,300 as the next significant support area. Next, we've got coffee trying to bounce off of support, as I talked about yesterday. Didn't quite get oversold. I would have liked that more if it had gotten oversold, but you can never make the market do what you want it to do. You always have to move with it. I'm thinking it's about to have a good rally, today being the first day. And again, it could just as easily come all the way back up to 167. That's what I'm looking for. Next, sugar. Topped out, overbought conditions, dropped off. This is a new low and a new low close now for a few weeks. So I think this area of support has yet to be challenged completely. We may not slip too much more. This trend is up. It's been a very solid bull market. We're just now dipping into support off the highs of April, May, June. I don't think it's got too much more downside potential, maybe 25 and then up. Cotton, trying to get through this resistance area again. Yesterday came up into it and stopped near the high in resistance, not overbought at all. There could be an upside breakout here. We could end up seeing a new bull leg starting if it will get a little bit stronger and stay there. Talking 89 and certainly anything in the low 90s would look pretty bullish. Next is the E-mini again. You guys have a great day. We're down 440 on the E-mini, 280 almost on the DIA, and 380 lower on the Qs at the moment. Looking for the October lows.